Go.
Hi, Warriors. Here we go again. Okay, so interesting that the S&P's got to my 4,900 level that I've been talking about for quite some time. It's a great example of it's not just it's not just hitting the price, it's how it gets there. Okay, so, I was expecting 48, 4,900, May, June, July. The fact that it got here so quickly um, tells me that this is a car wreck. Okay, so I don't want to be trying to bet that just because we hit a major support level that this is going to be the bottom. Okay, I believe it is a low, but not the low. And if you know my work, you'll know why. Okay, you know that we're getting all kinds of confirmed lows. I'm going to show you all these RSI patterns and prepare you for a couple of trades that I see ahead this week. Okay, here we go. All right. So that's silver. Silver's bouncing. I may as well start with it. Silver's bouncing. Gold's still lower by 13 with silver up 47. So we're finally starting to see a turn in the gold silver ratio. The only problem with it is look at the momentum up here. It was almost 90. What an explosive move. So you'll have to see some distribution here, but it is my view that gold's going to be the preferred short. You guys know that I was calling for that last week. We had a pretty good break, and I think this might be the first wave. I'm looking for shorts here up around 30.80, 30.90. And commensurate with that, I think that the yen has a chance of trading up towards 48, 48 and a half as yields begin to tick up a little bit just to correct all the flight to cash that we had last week. In fact, I think we're going to get a pullback and, yeah, pretty good pullback in the bonds. Now, I was constructive the bonds from here, but, I'm going to say something with the kind of sell-off that we had in equities. This is how the old bond market when I was, you know, before my prime would act on this kind of risk off move. You'd have limit locks on bonds and they would have acted a lot better. I don't think they're done. I don't want to get short. I still think rates are going to head lower and the 10-year is going to have trouble. Up here, maybe it's going to try and fill this gap at 412. But I would say that there's more left in it if I thought that we were at the the bottom of the S&Ps. But just look at some of the RSI structures that we have in S&Ps, and we've already bounced 100 off this line. If you need your memory shaken a little bit, this was the megaphone formation that I unveiled last year when people thought I needed to be stabilized. This was, see the line? It's been drawn for a long time. It's coming off it. Maybe you get a better view on the weekly. So I've been talking about that this was a potential target with a lot of confluence. And look, it went there, right to that line to the pip, right? I mean, look at that. I'll even go shorter term and you'll see. Look at this. Still amazes me. So I think there's more left in the S&Ps to rally, but I would not load up. In fact, I think that when you have markets that do this with momentum in the 20s, just like I showed the gold silver ratio in the 90s, that when you have this kind of momentum and not just on the 4 hour, it almost looks like you have two drives in RSI and that there's going to be another one after we relieve this oversold condition. But there's no divergence. These markets have been in car wrecks. Okay, this was a car wreck in the S&P. Okay, look at these ranges. So you have that happening in S&Ps. You have the same thing, even though silver's bouncing. Look at the RSI pattern in silver. And if you think this is the bottom in silver, It was a nice trade. You could trade these things counter trend, but I don't think that we're going to have major important turning points until late spring, early summer. This is a confirmed low. Markets don't bottom off confirmed lows, or at least usually the probability says that isn't. Doesn't mean that it can't rally back to 31 and a half or so before we start to probe this again. So what markets need now is time for healing. So this is going to be more of a scalping environment for the next few months until we get more evidence that there's accumulation happening with divergences developing on things like equities, on things like silver, gold. That was just the first break in gold, and I still see lower prices. I don't think that the trend in the dollar has changed. This is just a pause before the next break. I'd be selling it up here, all the way up to 104. Maybe we don't even get much over 370. And like I said, I'm looking for shorts there, shorts in the yen. Okay, we're almost unchanged on the days, so we're getting this reversal between 48 and 48 and a half, and then yield should start to drop again. So let's see how the miners are coming in. Newmont's down pretty good with gold, so almost looks like a breakdown. I think it's going to be a false breakdown. So I covered Friday and I had triples. Maybe I left a little on the table, not much, but now I'd be looking for a recovery in Newmont. This is the weakest gold stock on the board. GDX doesn't look that great either. Look at that, following through to the downside. Okay, there it is. So you've had a 7 handle decline. So you did pretty good. I'll stick with Newmont. So if we get a rally now, maybe halfway back, call it 6, you know, so maybe 46 to 47, I'll put those puts back out because I don't think the gold has bottomed. Um, I got stopped out of my WTI that I tried out of principle with at 62. You could probably wait until you're back above 62. Here too, looks like silver, looks like the S&Ps. Um, I didn't have any divergence. I just traded the line light, but I still think that there's a play coming. In fact, Netanyahu is going to be at the White House today, and I think they're there to talk about and finalize and get green lights because it costs a lot of money to keep all those aircraft carriers and B-1 bombers ready to go, battle ready. And BB's coming here, so maybe it's going to be this month. Keep an eye on mid-month for something like that. And if we start to get some divergences, I even looked at oil shares and there was nothing that really appealed to me. Um, Here's Oxy, so even Buffett can be wrong. Look at that. I mean, he was right about getting out of everything else, but I don't see a buy in Oxy. Okay. I don't see a XLF. They all have the same pattern. So I'm not doing anything there right now. I look at Petrobras, which might be a decent play because you'll be in the real. The real should appreciate. So I'm looking for oil plays. I just don't see them yet. Okay, so I'll keep you informed. The two plays that I'm really focused on right here is going to be selling the yen on strength. If you were in our in TradeGateHub last night, I put out a buy about 60 lower, took half with BE stops. So I invite you to come here to TradeGateHub and check out our posts and our interactions and Mike curating a great Twitter list for options, sweeps. So here you go. You're seeing these things. It's a great information source and you get some ideas. If you're a trader, there's unusual whales. So TradeGateHub is a very good resource. I post in there, Mike's in there all day. So that's a wrap for me, everyone. Good hunting. I'll be back tomorrow. And this week's guest is he's an A-lister. Luke Roman will be with us. And when I talked to Luke a few months ago before the break, he was very bearish accused because he said we told China we don't want their money anymore, and that's where they were parking their capital. And what a brilliant call by a guy who's really doesn't do a lot of sector analysis. He's really trying to keep people in alternatives like gold and Bitcoin and out of trouble in the bond markets. So mark your calendar for Luke Groman on Wednesday at 10:30 a.m. EST. Don't just count your pips, count your blessings. Get ready to sell some strength in yen and the miners. And I'll see you all tomorrow. Adios.